Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I will sneeze. Oh my gosh. I'm going to sneeze. I don't know why I'm having a sneezing attack all of a sudden at the beginning of the stream. Oh, okay. Hey, let's just go straight into the charts. Looks like ADP numbers were good. The Treasuries hitting down and everybody kind of freaking out about possibly higher rates again. Okay, so here's ZN. Yesterday was a bit of a fight, but in the end, they ended up again. And here in the overnight, they're pushing down, but like it's coming up again. So there is somebody like really fighting this. This is really interesting, but I mean, overall, it's been a buy. Like over the past 3-4 days, you won if you were a buyer. Here's the ES. You can see quite struggling. Oil also struggling a little bit, but not as so severe. Gold and silver is still within their ranges. Actually, a lot of volatility. So there's been some Chinese numbers. Those Chinese numbers really hurt copper here. And I think that's what's with the volatility in the metals. Coming over to the dollar a little bit lower, but nothing too significant over here. Make that a little bigger. And the Bitcoin taking another little tumble to retrace the gains from over the weekend. So that's where we're at, and we do have quite a bit of data coming out here. Okay, so wow. Whoa. US ADP employment change 278K versus an expected 170. That is a little wild. That is a wild number, man. 100,000. It was 100,000 higher than anticipated. It was still lower than last month. 296 was last month. It's still lower, but holy crap. Well, what do you think initial jobless claims are going to be? The expectation 235K. We also get like labor cost, productivity, things like that. And then later we get S&P manufacturing PMIs, ISM manufacturing PMI, which is always a very important number. So we get some numbers today, and then of course tomorrow, non-farms. So we'll have some time here to we'll have some activity here today to play with. Man, my nose is still kind of tickles a little bit. Probably have to blow my nose here in a bit. Euro area inflation cooler than expected. LaGuardia shrugs off dovishness is the most recent story on Zero Hedge. Bud Light giving LGBTQ organization $200,000 donation. I don't have anything about that ADP number yet, though. That ADP number is like, whoa, what? Unless maybe it's on premium. Nah. Good morning, Ishmael. Did I already say good morning to Octavia? I don't recall. Good morning again if I didn't. Who's this comment coming from? Oh, that tweet has been deleted. Jack Osibiek tweeted a quote: "The civil war on the right will tear each other apart, and the global technocrats will walk Joe Biden down the middle. They will prop him up with a stick like it's weekend at Bernie's to keep him on the ballot because Biden isn't the one calling the shots. It's the people in ... And then I can't read the rest of it. So I'm wondering if he's trying to make the case that a hard fought primary would open the door for Joe Biden to win again, and I really don't think that that's the case. So what we tend to find is that candidates who fight hard in the primary tend to do better. They get better experience. You get a better campaign and a better structure, and the people are more, the members of the party are more interested in following it afterwards. Of course, you can bloody a candidate up too much, and that's certainly happened before as well. But the idea yeah, the idea that, you know, a strong campaign between DeSantis and Trump makes it easy for Joe Biden to win is patently ridiculous. Okay, so here we go. Here comes the initial jobless claims. 232 versus 235. So I am seeing volume off of that. That number doesn't really interest me at all. Jamie Dimon should run. Well, I don't know if a run politics would go very well for Jamie Dimon, given all of the dramatic headlines over the Jeffrey Epstein thing with JP Morgan. So that one's probably out of the cards now. Oh, they are extending here in the Treasury. Delete. Dude, that is... that one doesn't really make sense to me. That one is... I don't know, guys. What's with that? How much volume is behind it? It's about the same for like that kind of a news. Like that's the amount of buying and selling that we've been seeing, but it seemed to go way further than they normally have been. I come in and I see initial jobless claims 232 versus an expected 235. That one to me is a like, that's close enough to the, there must be something deeper in the report that they're picking up on. Was there maybe like revisions or something? Hmm. It's very rare for the unit labor costs data to move the dollar, but it's happening today. USD JPY is session lows, completely reversing the ADP move. Oh, maybe it was that. US labor costs revised was 4.2% versus 6%. That could be it. It must be. Okay, so where does that put us for now? Well, I think that we kind of reached the extent of that. They're retracing a little bit. There was a little bit of a node there at like 14.5, so we can see what happens when they get there. But then we have like a really important ISM number at 10 o'clock Eastern time. So probably we might be able to like scalp a little tick here and there. I don't think that trade makes sense in the micros, but maybe in ZN we could mess with it. News squawk a little loud there. Turning him down. CNN politics. Trump has a history of saying things on tape he may regret. So yesterday there was a story that came out that where Donald Trump talked about taking a classified document and keeping it. So I don't think that moves the needle for anybody that supports him, because the whole thing is still that like almost all presidents do this apparently, and Donald Trump is the first one that's actually been like hit with it. Because remember that Joe Biden had all these documents like freaking everywhere, right? Media never talks about that one. They just kind of swept that under the rug. But so but the way that CNN politics puts that is kind of like, oh, we have more tapes maybe. That's what I think. Kind of curious to be releasing those sorts of things now too, by the way, because you know, if you want to hurt the right the most, you'd wait for Donald Trump to become the nominee first and then release that stuff. What's this? This one, I'm seeing a lot of people on the right are very, very upset about the debt deal, and I feel that there is a huge gap between what conservatives want and what is realistic to get. And to say that they sold Republicans, they sold out, I think is not. I think that the reality is that the deal that they got was probably the best that you were going to get, which really tells you something about the state of U.S. politics that's a little scary. But oh, what do you have here? Diamond is a banker and he must have dealt with Epstein's money. That's no issue as long as he wasn't in the shack. Well, so what the case is about in particular is they're saying that JP Morgan knew, and Jamie Dimon in particular knew that shady stuff was going on there, and they did not act. They did not do anything. So that's why he's in hot water. Is they're claiming that Jamie Dimon knew that Jeffrey Epstein was running a pedophile business, and Jamie Dimon sat by and did nothing. So if Jamie Dimon went into politics, like I think at this point it would be difficult to even appoint Jamie Dimon like Secretary of the Treasury or President of the Federal Reserve at this point. Like seriously, it would be like a huge political liability to do it right now. I think he was on the short list many times in here, but they kind of decided against it for political reasons. So now that you've got that, it's definitely not going to happen, right? A big old order at 16. That's kind of curious. You'd expect to see big orders at 16, but that one's a little weird. Okay, so let's read some of this data. Okay, against expectations of 170K print, the ADP employment report shows that the U.S. economy added 278K jobs, the second biggest beat in a row. Job growth is strong while pay growth continues to slow, but gains in private employment were fragmented last month, with leisure and hospitality, natural resources, and construction taking the lead. Manufacturing and finance lost jobs. ADP's Neil Richardson comments that this is the second month we've seen a full percentage point decline in pay growth for job changers. Pay growth is slowing substantially, and wage-driven inflation may be less of a concern for the economy despite robust hiring. Last month brought a broad-based slowdown in pay increases. Job changers saw a gain of 12.1% rather, down a full percentage point from April for job stayers. The increase was 6.5% in May, down 6.7%. Finally, we note that Challenger Gray showed layoffs rising at 287% year over year, so a mixed bag for Fed watchers. Jobs hot, wages cooling. Now for the jobless claims data, 232 Americans filed for jobless claims. 232,000 Americans filed. If it was only 232 people filed for jobless benefits, that would be amazing. Okay, very modestly higher than the 230K print a week prior, but below the expectation. Continuing claims remain below the 1.8 million Maginot line. This claims data post revisions remains oddly flat at around 18-month highs, refusing to listen to layoffs data and slowing wage growth. This is not what the Fed wants to see after 500 basis points of hikes. Yeah, with a 6-month lag, are we about to see another rebound higher in claims data though? I don't always believe what the DOM displays, since I feel a lot of orders are not shown to us. Well, so all of the orders that are going off on this exchange are shown to us, but there can be activity going on off exchange that you can't see, sure, but those changes generally do get reflected over here in overall anyways, right? So for instance, if I go and I execute something in a dark pool, Okay, well, so first of all, if two big guys execute in a dark pool, is that really something that I'm that interested in? You know, that a big collision like that doesn't necessarily make me want to buy or sell it. It kind of more means that we might just get stuck in a certain location for a while, right? But what often happens is you go and you do the transaction in the dark pool, and then that liquidity provider in the dark pool turns around and executes it in the market. And so, they'll do it with meta orders and everything, but you do see that flow come into the main market, right? So they ultimately can't get away from it. Like the issue here is when people will say, I think that there's kind of a misunderstanding about how order flow is actually used. People believe that order flow is used in the same way that technical analysis is used, that you're looking for some sort of a pattern in the orders, and then if you see that pattern, you can take a trade where it's likely to go here with this risk reward, etc., etc., etc. No, that is not order flow. Order flow is just the study of the orders. In order for the market to move, the orders, there has to be changes in orders, right? Market orders have to hit the, if we're going to move up, market orders have to take out the offers, and the offers have to pull, period. And if those sorts of things don't happen, then it's not going to move. And so I can always look at any move and see what the orders were doing to understand better what was actually going on there. And so, yeah, if I'm moving up because of something that's going on in another market, I'm still going to see it reflected here, right? And what am I really doing? I'm trying to read the flows. I'm trying to, based on how it's being executed, sort out what flows are active in the market that day and making predictions about flows that I'm going to see come in the future. It's not technical analysis. Because if it was technical analysis, then not being able to see all of the orders maybe would matter, right? You can't expect big boys dumping a market with a big market orders. Well, yeah. This is one of these other things is that, again, I think that a lot of retail traders are looking for when I first was watching order flow, I was looking for those big orders, right? But once you realize that those really big orders and the impact that they have on liquidity actually kind of gives you a good reason to not trade, because it just doesn't go anywhere, right? The big single collisions aren't really what you're interested in. What you're interested in is an order that is going to take them all day, if not multiple days, to execute, right? Like this thing that's been going on in the Treasuries over the past 4 days or so. Somebody's buying it, man. I don't know who it is. I kind of suspect that it's the Bank of Japan, because the Bank of Japan did mention that they were involved in a bond buying operation. Is that something that they could do that would, take them several days to complete? Yeah. Right. You only trade with RSI? Well, good luck to you. Have fun with that. I don't think I'm gonna trade this for a bit. It's pushing higher again. I'm not quite sure I understand the drive here. I mean, I do think that it was probably the labor cost revised number that is affecting this market, but seeing the continued long flows and everything, I'm not quite sure I completely understand. Oh, it's stickball. Okay. Yeah, then you've probably seen it before, right? Oh, thank you, Ishmael. Yeah, but I've done actually a lot of studies with RSI. Yeah, it's been a few months, hasn't it? Oh, okay. Can you be in debt to your broker, and then what is the point of margin? Okay, so good question, actually. So no. Well, yes and no. Okay, so the way that it works is if I want to come in and trade ZN, one contract on ZN, for every contract in ZN, I have to have $500 in margin in my account in order to trade. Okay, now here's the thing. The thing that I am trading is worth more than $500. Okay, a treasury contract is basically like 100K treasury bills. So it's actually worth like $1 million or whatever, right? Or is it just 100,000? I forget. Okay. But so if this instrument was all of a sudden something crazy happened and all of a sudden they closed the market and it closed at literally zero, then yeah, you would be out over $100,000, right? Okay. But that's kind of silly because that never happens, right? In fact, on a good day, like a strong move on a crazy strong day, you know, it maybe moves $1,000 per contract, right? Okay, so it'd be ridiculous for you to have the whole $100,000 to trade it, right? So that's why they give you margin. Okay, but if your account goes below the $500, so you put 500 in and then you make a really bad trade and you lose, you know, let's say you have 1,000 in your account. You put on one contract, and then on that one contract, you lose $500, right? Once you go below the $500, they're going to liquidate that contract, right? So, essentially, what the broker is doing is they're saying, you don't have enough margin in your account to be able to pay us for the losses if in the worst case scenario. And so that's why they force you to have a certain minimum amount, right? Okay. But here's the thing. Every once in a while, something crazy happens, right? So for instance, there's this documentary that CNBC did about trading that, and they go a lot into stuff that happened at the CME. And one of the traders that they follow in that is a guy who was trading Japanese yen futures, and he had a really big position on in Japanese yen futures. It's one of those things where like he kind of wanted to get out of the position, but he couldn't, and so we left it open overnight. And then something crazy happened in the Japanese yen. Okay, so it was one of those big events that having the margin in your account, you know, that's why they force you to have it. But it ended up being like way even bigger than that. So now this guy, his account is negative essentially at that point, right? So can you end up in debt to your futures broker? Yeah. And that particular guy basically was banned from trading after that, right? Because he couldn't pay it back. He had to declare bankruptcy and he was banned from trading. Okay. Very, very unlikely for that to happen. But you could, if you're doing something really dumb and you get really unlucky, you could owe your broker, yes. But that's typically not what happens. What typically happens is once you get below the margin, they just kick you out of your position. And then you can't trade that instrument anymore. Okay. Is the Discord channel actually a thing? Yes and no. So there is a Discord channel for subscribers. It to make the Discord room worth it is up to you. So not very many people have used it, right? So if you go into that room and you start asking questions and you start generating conversation so that it's on the top of my mind and I'm thinking about it and stuff, then I'm going to start giving you, putting stuff in that room that's like going to be very helpful, right? Current news stories and things that I don't necessarily share everywhere, right? But, you know, it's kind of up to you to request it and start talking about things and stuff, right? Yeah. Funny thing about brokers, they'll blow your stops if you're holding during news releases, but they'll be able to liquidate your position on a dime no matter what if you ain't got the margin. Yeah, it's kind of like they're pretty merciless. I have found that the FCMs are pretty merciless about it. Like it's like just automated for the most part. If you get to that threshold, they just kick you out of it. And I have had situations where they executed me out of a trade when the trade was actually going well. So that has happened once or twice. But I think there was, like, during those times, there was all sorts of weird platform issues, and like what I was able to see was going on my end. It was kind of difficult, and so I don't think that I completely understand what happened in those situations. I just came. Sorry, can you repeat what? Oh, we were talking about a story. So there's this. If you've never seen this documentary, guys, you gotta go and see this documentary. And I'm not sure where you would find it, but I'm sure that if we searched YouTube, we could probably find it. But CNBC had a documentary about day traders, and it followed a lot of traders at the CME. And one of the people that it followed was a guy who lost big time in the Japanese yen, and as a result, because he couldn't pay up. Yeah, it's called the pit. That's right, the pit. As a result, he had to declare bankruptcy and was banned from trading. So he can't trade anymore, and he was just like one of the floor referees or something like that at the exchange instead. It's like a really sad story because you could see that it was like, I mean, it's maybe that's not the reality, and the documentary just kind of portrayed it a certain way, but the way that they portrayed it was basically like this guy was a shell of a man ever after that. So he didn't have many avenues for, making money, and he couldn't do what he ultimately wanted to do. You have the physical DVD. That's a good. The pit, and then the other one about Mad Dog in Australia. Those are like the two best documentaries I've seen on that. You really want to know how a big guy works, you watch that one about Mad Dog, or whatever his name was, because that's one where you really see, like, okay, here's this guy, he comes in, he's gonna place some sort of a spread trade, everybody can see it, right? And so he has to factor that into how he trades and executes and stuff. What did he do to get banned? What he did was he couldn't pay, right? So he took a loss, and he wasn't able to pay back the loss. So basically, the clearinghouse or whatever it is, that has, emergency funds on hand had to eat it, right? And when that happens, the exchange bans you from trading. Yeah. I don't think any are gonna ever do that though, so. I don't know, man. I really thought that initial move was a little overdone, perhaps, and maybe they would try and retrace that, as that's the way that a lot of moves have been going. This flow continued on. It may not have anything to do with the news. I mean, it's been just buying all week anyways, right? We don't completely know what's driving it. Perhaps it could be the Bank of Japan. It could be something else. I don't know. But I remain on the sidelines because I just do not know what's going on here. So he didn't have a stop loss. Well, what happened was the move happened in that hour between when the exchange is closed, essentially, right? So at that point, like, the loss is locked in. Yep. It gapped down in the overnight session is what happened to him, I think. So based on how he describes it. I'm in Australia. You mean Bears and Bulls? Maybe that's what that one is called. I don't remember what it's called, but it's a documentary where they follow one trader in particular that was like the biggest trader in Australia at the time, trading, making spread trades. Yeah. But yeah, so that's a critical point here is like, in order to get into a situation that's bad enough where you owe the broker money, well, number one, you'd probably have to have a relatively large position on, and number two, you'd have to have some sort of a gap on you, or like a gap overnight or something like that. So it is possible, but it's probably not something that's ever going to happen to any of you, right? So GB Good was the one that was asking that question, and also, oh, you know, he asked some other questions. Is Jigsaw Simulator good? It is the best. So the Jigsaw, so one of the issues that you'll have, so for instance, if you use the CQG or Rhythmic Simulator or some of the combines, one of the things that you can do on the combines is you can put a limit order like really far out there, and then when it gets there, it thinks that you're first in the queue because it's been so long and all of these other things. There can be these situations where you can trick the simulator into thinking that you're the first in the queue, and then you can just take like, you know, a tiny little trade there and make easy money, right? So you could totally pass a combine just screwing with the simulator, probably, right? Jigsaw, on the other hand, is simulating all of the queue dynamics here. So when you put an order, a sim order in, like right there, and it says I'm 2034, right? When the orders in front of me pull, there's an algorithm about like how many of those orders were actually in front of you. And so it estimates really well where you are in the queue. And the thing is that Jigsaw is actually stingy about it. In other words, it is harder to get a fill in the Jigsaw simulator than it is in real life. So I don't think that any other platform goes into as much detail with the, you know, the orders and the queue dynamics and all of that sort of stuff. And that's why I feel that Jigsaw really does have like the best simulator, you know? So one of the things I see a lot is people will be doing back tests and stuff like that. And they're like, well, okay, what do you think about this strategy? But then you look at it and it's like, there's no way that those results are going to translate to live. But if you're over here in Jigsaw Day Trader and you're trading one contract, you know, one of the things people do is like take on way more risk than they really actually have the ability in real life to really manage. But if you're just doing one contract and you're managing risk on it, and you're doing well with it in sim, of course you'll have to deal with like the mental issues and so forth of when it's real money, but overall I would say that should probably translate really well, right? And I really do think that the simulator is one of the biggest selling points of Jigsaw Day Trader. And of course, you know, since it looks like it's somebody relatively new coming in, you know, I am a Jigsaw affiliate, so keep that in mind with what I say. But I have an affiliate link in the video description. If you purchase Jigsaw through that link, we get a commission that we invest back into the channel and that we're using to build a data center of sorts. What is a spread trade? I hear that a lot. Yeah, so what I mean by spread trade is that he's coming in and like buying the 5-year and selling the 10-year. Right. So he's giving himself exposure to the yield curve rather than the outright individual legs, right? Yeah. So when you get into some of these really big traders, a lot of them are doing yield curve stuff, and that's what Mad Dog was doing apparently. I find yield curve trades a little bit difficult to sort out in the short term. That's one of those places I would really, you know, Oh, would I really like to? I don't know, but it's kind of one of those things in the plans that I don't know how serious I am about it. But it seems to me that as you progress and you get better at this, that the natural progression is that you start managing other people's money. And so at some point, I think that we start a CTA fund. And I don't know exactly what kind of a fund it would be and everything. The stuff that I've been practicing has been largely discretionary treasuries, right? But, you know, if I was running a fund like that, one of the things that you would maybe want to be doing is spread trades. And I would like to do a lot more research about possibly the stylized behavior of spreads. You know, are there stylized behaviors in spreads? I don't know. Are there particular strategies? Well, there are a couple of strategies in terms of like bond strategies, but I don't know about necessarily how those translate to in the futures, you know. But that's one of those areas where we want to do more research, and we're kind of building out the computing power. And right now I've been doing a lot of personal life work. So like working on the yard, I've been building this gate, we're building the desk, which I guess is for the stream, but it's the desk. Once all of those things are over with, I'm gonna have a lot more time to, especially on the weekends, to go back into studying and researching. And so probably in the next month, we're going to pick up I mean, it's been like, what, 6 months now since we got the Series 65. So I think it's time for us to go and do the Series 3, get that out of the way, and get into some of our deeper quantitative research for longer term edges that we can potentially use for managing other people's money, right? So spreads is one of those places where we're going to have to do a lot of work. Do you know a free EA builder for MT5? I was working on one and it turned out it's paywall. I really hate MetaTrader, man. I that's like the one trading platform that I would avoid. It's not because there's something shady about them or anything like that. It's I just think that it's like the Walmart of trading platforms. You know what I mean? Like it's worse than the Walmart. It's like the Dollar Tree of trading platforms, you know? Like it's really basic, generic. Their intention is to get as many people to buy it as possible through whatever means possible, and so it's just junk. I feel it's like it's a junky platform. And like, yeah, you can build strategies for it, and they have like this store where you can sell them, but like that's totally stupid, right? Nobody's gonna sell you a profitable algorithm. Anybody selling a profitable algorithm to the public is ruining the edge of that algorithm. So you know, anytime that somebody talks about selling robots, you can just immediately click away. You immediately click away on that one. And MetaTrader, they literally have a tab in the application where you can look at robots and try and buy them. Right? It's just crazy. It's crazy. It's just dumb. Yeah, the Jigsaw simulator is very, very good. The Jigsaw simulator is more realistic to real trading than any other platform out there. And the simulator is actually more stingy than the real market. So if you got filled in the simulator, extremely likely that you would have gotten filled in real life. Yep. Now, yeah, if you purchase Jigsaw, I have an affiliate link in the video description. In a full disclosure, Jigsaw affiliate. But I only, man, I tell you what, it used to be in 2021, there'd be so many people would like be emailing me, asking me to like to promote things and stuff, and I just ignore most of them. And it died down big time, and I'm starting to get them a little bit again. But I really do not like to like promote products and services and stuff unless I really like them and I'm using them. Like, I'm not going to put something in the video description unless it's something that like I actively use, right? I'll make a one-off video about a new service, because I think that's value to my subscribers. But yeah. Okay, so professional or institutional. So if I'm purchasing Jigsaw, I would just do the base level package. So the only difference between the different packages that you get is the education that comes with them. And I'm not saying that the Jigsaw education is bad. It's just that, like that institutional one in particular, you don't need it. Okay. Like institutions are willing to pay for that. Fine. But it's more than you need. It's more than you need. The professional course is really, really good. And hey, you can learn to trade and do really, really well by watching all of my videos and just coming in and watching the market every day. So the vast majority of people that because I can see when people purchase it and which package they bought, and the vast majority of you just get the standard package. Not saying that the professional's not worth it. It's just like, you're a retail trader, you probably don't have money coming out of your ears, and I would save as much money as you can for your account, right? I would only be getting the professional if you're like already a multimillionaire, and you just really want to go hog with it, right? How many lots do you trade? I like to keep it to just one. I'm making super tiny trades here. Most of the time I'm only trading in the micro yield futures. I'm making $10 to $50 a trade. I keep it real small. A GitLab repository? Okay, so some of my NinjaTrader stuff is in a repository, and I think there are some of them even that you can see, but it's not anything that anyone's ever. I'm trying to code a strategy even if it's a losing one, but I want to code it. Well, I can certainly help you code. I mean, I have some videos about how to code a NinjaTrader, right? You watch those first videos and then start going off on your own, and then when you run into errors and problems, you can ask, tag me and ask questions in the Ninja Script channel. You want to start to contribute? Well, we might have something here. I've seen a decent amount of interest in, the data pipeline sort of a thing. So when I start that up, I think I will make a public repository for it. How do you chart spreads in NinjaTrader? Well, so a NinjaTrader does not have any built-in facilities to chart spreads, but my indicator package that you can download and trial for 2 weeks, and then it's $100 lifetime license, $100 for a lifetime license, one-time fee. And that has a spread indicator in it. There's also a free version, I think on the Discord. If you go into the downloads channel, somewhere in there is a free spread indicator. But I have one that's a little bit more sophisticated. It does a bunch of extra things. It handles discrepancies between live data and historical data better. It allows you to chart multi-leg spreads, a bunch of things like that. And then you can chart the spreads. So as an example of charting them, right, this data series down at the bottom of these bottom three charts, the bottom yellow series, those are my yield curve spreads. So you can see that we steepened through this move. We've been steepening, although it's kind of starting to flatten out, or at least that change in the steepening is starting to even out, is what I should say. How is the flipper? Well, so the flipper does not trade Western markets anymore. My understanding is that the flipper moved to Singapore and he is now trading less developed markets. So I think that what happened was, number one, he was spoofing, and so they kind of clamped down on that. But number two, I think that people caught on to what he was doing and just it didn't work anymore. So the mature markets weren't really a good fertile ground for that strategy anymore, so he moved to smaller markets. That's my understanding. What was the name of the documentary? Yeah, it was a CNBC documentary called The Pit. Let's just find it. That's the one where the guy is like, people don't understand. If you're down, buy more. Buy more. And if you're up, let it ride. Just let it ride. Oh, well, there's bulls and bears. I'm having a hard time finding the CNBC one. Bulls and Bears is there on YouTube. There's Bulls and Bears. Is it this one? Oh, okay. Well, the other documentary, okay. The other documentary that I'm talking about, I believe, is called Floored into the Pits. Oh, yes, that's right. So I think it's this one. It's this one right here. Gone are the days of just walking into a major financial institution and getting a job off the street. I wish I could work in those pits. Yeah. Well, you know what I wish that we had was I wish that we had more of a pit online, which is to say, or let me put it this way. There should be an official CME Discord. That's the way that I would put it. There should be an official CME Discord. Like, I think that because there was business and opportunities and things that would come along, just by nature of you being in proximity and being able to talk to each other and stuff, right? You know, so like one of the things that I've heard would happen is, you know, if you have to execute large trades, right? That's hard, especially if people know that it's coming. If they know that it's coming, you know, they see you're on the phone and you get off the phone and come over to the pit. Like, they know that you're going to be executing some sort of a big order, right? And so when those guys would get off the phone, like, everybody in the pit would start bidding things up and there'd be volatility and stuff like that, right? And so one of the things that they would do is, you know, they would split that order up amongst many different traders. They would say, okay, we need you to buy a certain amount, and you need to buy a certain amount, and you need to buy a certain amount. And so what they would do is they would go and recruit other traders in the pit that were just like independent traders, right? People that nobody would suspect would be a part of this large meta order, right? So it would be like one of those things where like, hey, you know, that kid, he was like only trading single lots for the past week, and now all of a sudden he's bought like 100 lots, like something's up. Like that sort of stuff would happen. Good idea. So I think that like some sort of official forum or chat room for the CME would be really cool. I mean, my understanding is that in many respects, the Bloomberg terminal is kind of used in that manner. But I would like to see something that's public that, you know, I think that it should be like you have to actually be trading on the CME. Like you have to have like a futures account in order to participate in it. But what you got here, Uzi? Oh, he dug out the DVD. I think this is it. Let me come in here. I'm gonna mute it so that you can't hear it. But where was the part where there's the guy that got screwed? I think it's this guy right here. Yeah, it's this guy right here. Could be wrong. Yeah, and then there's the guy that like goes hunting and stuff. Anyways, that's the one. Yeah. You know, the thing that I find the part of that documentary that I think is the most interesting is there's this guy that they're like, okay, we were told to talk to you and that you would have a lot of, you know, that you'd be able to tell us a lot of stuff. And this was the guy that said, you know, if you're down, add more. And if you're up, just let it ride. Right. So that right there is, okay, this guy made a lot of money from just taking on a lot of risk. And so probably what happened was it was just like he could never lose, just won every time. And then all of a sudden he ran into the drawdown. And they were like, why did you stop trading? And he was like, get out. I mean, he's drunk while he's giving this interview, but he's like, get out. So like he blew up basically, right? Like he put enough money away to like live on it forever. But I think he blew his account trading. Yeah. That's the... How down do you get news? What do you mean by that? So I use Financial Juice for my news squawk, and that's where I get breaking news. I'm also constantly following things on Twitter. I'm also constantly reading financial news like CNBC. Zero Hedge has a lot of really good stuff. Actually, we should come back in here and see if they said anything about that. What was the number called again? Labor costs. Yeah, labor costs. Wow, Mexican TV spots cartel wielding anti-tank rocket launcher. Outside of AI, stocks are beginning to flag a recession. Nope, not a new one. Just the jobless claims data. Best trader? Who knows? Probably the best trader is not somebody that we're aware of. Okay. The vendors thing. Well, I don't know. I think that there's some really valuable stuff that we could learn from Navinder. I hope that he speaks. I hope that he like writes a book or something like that. Really do. I don't know if that's the sort of thing that he would do, but yeah, I don't know. The guy that I follow the most closely still is Jean-Philippe Bouchot. This is one of the co-founders of Capital Fund Management, which is one of the best performing CTA funds and companies in the world right now. And he continues to put out like really good research and stuff. I haven't seen him publish anything like microstructure related for a while, but he did get a publication in a major journal recently. He did one more recently about he showed that I think one of the things that they showed was that income inequality increases the larger a city becomes. Anyways, did I miss anything? Just scrolling back here. I think we got covered all that stuff. There's a lot of good questions. Would you get it bigger? I mean, I probably should be trading larger than I do, right? But I don't know. I guess I'm not as ambitious as I used to be. Right? I'm kind of to the like, well, you know what I'm doing right now seems to be working really, really well. And I know there's like the risks like of drawdowns and stuff like those still happen. So, you know, let's just not rock the boat by changing anything. But if we continue to perform as well as we have, you know, there is going to be a point where I really will have to start trading multiple lots. And every once in a while, we do get into a situation where I feel like it's worth it to do it. But keeping it real, yeah. I mean, the issue is kind of like that hunger, you know, like. You know that one of the things that best predicts for success is like having a chip on your shoulder, like some experience in your childhood that made you feel inadequate, and so you're trying to prove to everybody that you were something. You know, like the right amount of trauma makes people more successful. And that's not me. Right? I'm a guy that you know, I went out and set out what I wanted to do. I wanted to get into computers, and I knew that it was a good industry, and I went and I did it, and I got really good, and I have a pretty darn stable income in life off of it, enough that I can afford to spend a large portion of my time and income on the futures trading, you know. And so I'm not the one that's sitting here like, oh, I absolutely have to. I get to become the biggest and all of these sorts of things. I mean, it would help the channel if I did that, right? But I'm more concerned about like what helps the community the most. And so coming in and showing you the hardest way of trading, you know, and the most risk adverse way of trading, which is just coming in and just trading one lot on the micros, is I think helps people the most. So what you're saying is my dad not loving me might, yes, it might be, right? It's funny how that works, because again, it's like, what is driving you to push yourself, right? Well, what drives me to push myself is to learn more about the markets. You know, I enjoy the markets so much. The money and like the praise that I might get from other people of like making the biggest trades doesn't appeal to me, right? What appeals to me is knowing the most about markets, which is kind of why like going in, you know, eventually turning this into a fund, that's more interesting to me. I mean, I suppose you probably make more money doing that too, but you know, I'm interested in that because that's a place where I think I would learn a ton, right? Trade gold. Yeah, gold has been okay lately. I tell you what, the one instrument that just like continues to freak me out is oil, man. I mean, there was a period there where I felt like I understood oil pretty well, and even though we made some bad trades on it, like we had the larger call correct. Now it's just like swinging around wildly every day, and there's all this argument over whether it's going to go up or down, and I'm just completely lost trying to keep track of it, man. Now the split side of this is that Ego kills trades, man. Ego absolutely kills trades. When you get into that narcissistic ego mode, you make bad decisions. You just straight up make bad decisions. I was talking about this with my wife the other day. You really have to be cognizant about situations where you're basically setting yourself up to not make good decisions. So a situation that came up was a friend wanted to borrow money, and I felt bad about it, but that's always been a red line for me. I absolutely not going to do it. If I go in and I loan money to one person, then, I have to say yes to everybody, right? How can I say, well, I loaned this person money and didn't loan this person money? And the thing is that if you're going to do something like that, you really have to be like serious about it. If you're going to loan money, you want it to be paid back, which means like setting up an agreement and a payment schedule and interest and all of those sorts of things, right? So you're making like serious decisions about risk management and things like that, but you're doing it in a situation for a person that you care about, that you like, right? You're never going to be able to make good decisions in that situation. And that's why, for me, that's just a red flag, because I'm never going to intentionally put myself in a situation where I have to make decisions where I know that those decisions are probably going to be compromised, right? Yeah, PMI. The PMI at the top of the hour is the one that really matters, right? But we'll probably move on that PMI in 15 minutes too. So it's the same thing in trading, that, you can absolutely put yourself in a position where you're just not likely to make good decisions. And that's really hard. So you really need to intentionally avoid those sorts of things. And one of the ways that you can do that is with the ego. If you put yourself out there in public on Reddit, or even if you're coming in here and you're saying something in chat, where you really like stake your reputation on saying something, you're going to start making bad decisions off of that. Always. Because like ego will drive you to do things that are not in line with what makes the most sense based on the market. It just does. And what does the ego do? The ego says, oh, I know I'm down like way more than my daily limit, but I'm going to double down and add more, right? Ego causes you to double down. It causes you to take on it because you never want to be wrong, right? And I've seen it. There's a lot of these people that become like quote unquote gurus, the gurus that are like really out there scamming people and stuff like that. I think that a lot of them, the way that they end up getting into that is because of the ego. They weren't really truly successful with it, but they couldn't admit that to themselves. They certainly couldn't admit that in public, and so they have to scam people instead and tell them inaccurate things about what their performance is. Whereas me, I'm just like, well, I don't make any performance claims. Sometimes I make money, sometimes I don't. What matters is what we can actually prove about the market. I'm going to give you that information and nobody else does. That's where I bring you the value. Prop firm or not, I'm not really a fan of the well, first of all, I really don't like calling them prop firms, to be honest with you. Oh man, we're getting another move here. On the S&P 500 is falling hard. Falling hard on that opening move. Well, so to me, a prop firm is like, you're trading their money, but the combines aren't really quite the same thing. It's just not, they're not the same as traditional prop firms, right? I call them more combines. You come in, you pay money to take a test, and then if you pass it, then maybe they let you trade their money. But this is not the same thing. Those kind of firms were valuable in the past because, to really trade like one ES contract, you need a couple $1,000s, right? and that allowed you to get in for, you know, like $100 a month instead. Well, now that we have micro futures, it doesn't really make sense. And so the advice that I give to people is just trade your own account on micro contracts. Like, well, so I don't know why you deleted your comment, but like Axia is totally right? Like Axia would be like more like a legitimate prop firm in my opinion, right? If you have the opportunity to go and on site trade with the guys from Axia, I would go for it because there are some good traders over there, right? But like, you know, this like Top Step Trader and Earn to Trade and all of those sorts of things, I'm not saying that they shouldn't exist. Okay, there are situations where they make sense. There are situations where they make sense, but for most people and especially beginners, I think you're better off trading your own account on micros. And I really feel that if the prop firms were concerned about, you know, trying to make traders successful and help the community, that they would adjust their combines to not have such aggressive targets and to try and guide traders more towards consistency rather than taking on risk. Because when you really look at the parameters, they're basically asking you to double an account in a month. It's kind of silly. How much is good micro E-mini? Yeah. Well, so even the micro E-mini can move a lot, right? These days you're talking about the average move being $100 in the E-mini. So if I was going to trade the E-mini again, I think that I would probably want to have a few thousand. It used to be, oh, you could come in with 1,500 and do fine. But in micro E-mini, I'm not sure if that's enough anymore. You can trade ZN with 1,000, 1,500, something like that. But it's kind of tough. But yeah, if you 1 or 2K to start in the micro 10-year, oh yeah. I mean, you could probably get away with a few hundred, frankly. I'd have to go back, and I don't know how I'd be able to pull the stats out on this, but I think that the maximum drawdown that I've had on this account is like $200 or something like that. Discounting what you pay for like commissions and data fees and stuff. Trade ZN with 1K, withdraw any profits down to 1K and refund if you hit the yeah, could do that. Yeah. So for me, because I'm with Edge Clear, I think you need like 2,500 to trade. I think that you need the exchange margin to trade instruments like CN. You might be able to discuss them with it and get it lower, but I like I said, I could do that right now, but I'm happy with the way things are going right now, and I just want to work on this account. Maybe after the summer we might look at sizing up a little bit, but lots of things that I want to kind of look at first. It lets you get comfortable with making money and blowing your account. I think getting to the point where you get kicked out of a position it's a real kick in the gut. I feel when it's happened to me, it's a real kick in the gut. I feel really bad about it, you know. Like I don't just feel bad about it. Like I feel like morally bad about it. You know, that feeling that like you did something wrong and you made a mistake, and you can just feel the cortisol in your gut. Yeah, you don't want to do it again, right? Everyone looks at blowing an account. Well, if you like blew, so I think one of the things is that blowing an account in futures is very different from like blowing an account in options, right? So that situation in options where all of a sudden you owe the broker money is a lot easier to pull off in options. And so this situation where they just straight up close your account, and that's like a blowing an account is when the broker closes the account on you. You know, that happens in options. This doesn't really happen in futures as much. So the equivalent in futures is that you don't have enough margin to continue trading the instrument, but you would still have the account. You could switch to another instrument that requires less margin, or you could refund. And so it's not quite the same, but you know, and that's why I think it's like people look at blowing an account, just put in more money. Well, in futures you can do that. If it was actually like really truly blowing an account, then that's like you're probably not trading anymore, right? Futures versus options. Well, so I think that options is a more fair game. Futures is kind of like the hot thing, so there are definitely places where you can make money in options. I'm a little unsure about where you would find those places as a retail trader, but you know, if you really know something, like what I would do is, you can do all of the things, right? Have a brokerage account, have it set up so that you can do options, and every once in a while you might run into a piece of information that really gives you a really good chance of, you know, being able to make a play with options and then go for it, right? But like on trading them on a daily basis, you can do it in options, but how can you try? I don't know if you can. I don't think it's easy. Well, I'll say. And I think that you would have to like take their education program first too. So wait, what are you talking about, Uzi? Uh-oh. Uzi thinks that Saf is Salim. You might be right. He is kind of asking the kind of questions that Salim tends to ask. But I don't know why Salim would go and make a new account like that. You started algorithm trading and it's hard but it's profitable? I think algorithm trading is more difficult than discretionary. It's more difficult to be successful algorithm trading than it is discretionary trading. But yeah, you gotta be careful. Like the track record that you need to call yourself profitable in algorithmic trading is quite a lot. See, Zaf says that's not him. I don't think it is him. There are some similarities, aren't there? Asks lots of quick in succession questions and stuff. It's okay. I don't think he's asking super terrible questions. Oh. He asked, what is your edge? Well, the edge changes every day, right? what we're looking for is a piece of information that can accurately predict the future orders. Speaking of which, we are coming up on this PMIs, so we need to start thinking about that. The S&P manufacturing PMI final, we're looking for a reading of 48.5, which is in line with the previous reading of 48.5. What do you think is the reason for the dollar going down? I think that the dollar may be getting, so it seems to me that when we got that number, okay, jobless claims and continuing jobless claims were like mostly in line. So that really doesn't explain the action that we've seen this morning. But US labor costs was 4.2% versus the expected 6% and the previous reading of 6.3. So I think what's happening here is that the dollar is going down, the Japanese yen is going up, and the treasuries are going up because of that labor costs number. That's my theory. But this is extended way further than I possibly could have imagined. So I haven't placed a trade. I'm in the situation where I feel like I have to admit that I don't completely know what's going on, and I just kind of need to wait for an opportunity, right? But these PMI numbers might give that to us. So I'm a little bit of pulling for the S&P manufacturing PMI. Let's see what we get here. Okay, so the number is very close, 48.4 versus 48.5. Not really seeing any volume come out on that one. The ISM manufacturing PMI is probably going to be a bigger deal. I think for the ISM, you'll probably see the book almost completely pull and probably a significant move regardless of what the number is. Right. Well, and remember that before, or there's the ADP employment change, right? So ADP was like way bigger than expected, right? And then when that labor costs number came out, it completely erased that move. It was really quite crazy. Where's the best course? I'm going to be making a video here soon about volume profile, probably this weekend. Probably going to record it this weekend and put it out on Monday. But what I would do is I would watch my order flow series. I know that it's primarily about the DOM and everything, but I'm giving you information in there that's applicable to whatever tool you're using in order flow. Information that I really don't feel is out there and is backed by science. So really watch that order flow series. Let's see. Here's NASDAQ Technologies. At NASDAQ, we're arguing about whether it's SAF is you or not. So now we'll see if they speak at the same time. And we're there was somebody else in chat asking a bunch of questions, and that kind of seemed vaguely familiar. Like maybe it was you. And I was like, I don't know why he would do that though. We've got a great thing going on here now when he just comes in as himself and asks questions, right? and like the thing was, Asaf asked a bunch of questions, but they weren't bad questions. They weren't bad questions, were they? I think that there's this personality, like it's probably like just a learned strategy that people figure out in live streams is like, if you come in and you start talking a lot and saying a bunch of things, then eventually you're more likely to get the attention of the creator, right? I only ask questions, not bad. Oh man. That's the other thing, is that Saf didn't pontificate or pump himself up at all. So I Okay, well, so we get like 15 minutes here now, I think. They are falling a little bit. The action in the S&P 500 does not look good, though, does it? I mean, it's been down past few days in the S&P 500, but it hasn't been too bad. And I'm still kind of sitting here like waiting for this. You know, there might be a point where like they really, really puke it hard, you know? Uzi still thinks it's obviously him. Well, they're not both talking at the same time now, so you do kind of have to wonder. You do have to wonder. He's probably actually is not Salim, and we chased him off with accusations. He got embarrassed and left. It's all your fault. He could have been he might have been one of the best traders, and you chased him off. Uzi. Did Financial Juice get what are you talking about? The PPI number. You talking about? Coming over here to Forex Factory and seeing if there was like a PPI in a currency that wasn't paying attention. Oh, there was a German. Yeah, there was like German, and I don't know if I did. It doesn't go back. It only shows you the current day. Right, it only shows me the current day, so I can't see, but I think it did. I think it did. Oh, no. You're sorry. Wait, what did you say? PPI, not PPI, PMI. PMI. No. I get it at the same time as the rest of you at 7:45, but I know that it comes out early to subscribers at 7:42. So all I was doing was watching the order flow at that time to say, okay, well, I don't know what the number was, but it must have been good because they really moved off of it, right? Again, it seems like almost every time that happens, it comes up, you know? It's one of those little pieces of wisdom, gained knowledge, whatever you want to call it, that new traders often don't pick up on, is that Chicago PMI is released early to subscribers. You will see a move happen 3 minutes before the actual move, and you know, a lot of people don't know what's causing it, but it's the PMI. But I didn't get the actual number until 9:45 like everybody else. I remain intact. Oh man. Oh, you know, I does seem like really bad action in the S&P 500, but I guess it's not like that bad. I see that a lot when I trade news in Europe, and they don't have time controls like the US. Oh, really? Well, this is one of those like currencies. That's one of those big reasons why I don't think that it's really hard to trade currencies, because there's no controls like that at all. You know, if there's something going on with a government that's going to affect its currency, it will move, and they can trade it, and there's nothing stopping them. and you're not going to get that information until much, much later. And those moves that you get in the currencies can be so extreme that it's just like really hard to make money from them. Yes, I still use Financial Juice. I really think, especially for like getting the numbers, that Financial Juice is the best, but it's definitely the most affordable. I think that News Squawk, they're called News Squawk now, formerly ran Squawk. I think that overall they're a better News Squawk, but there are some things that Financial Juice does better. Like, I think that the Financial Juice interface is awesome. What time do you have your volume profile reset? My volume profiles reset when the regular session starts. I could change that. The thing is when you come in here to Jigsaw and you're setting an instrument, right? Okay. You can select the session, right? So I just have it do the default, and if I wanted to do the extended, every time that I have to change the instrument, I have to go and double check that, and I just don't bother because I don't care. So I don't have my volume profile set in that manner because I think it's like more optimal or something. It's because it's because I don't care, because I'm not using those things as some sort of an entry or signal for a trade. I just want to watch the profile as it develops, because that kind of tells me things about current liquidity conditions, and there are some stylized behaviors that I will see in the order flow, but it's kind of useful to see the volume profile because you can kind of see them there too. What do you like about their interface? Well, so one of the things that I really like about the Financial Juice interface is that you can set a sound to give you a different sound if the number is above or below expectation, and you can actually set it. So like, let's do this with ISM. US ISM prices paid. Okay. If the actual was greater than 53, then I want it to say buy. And if it's lower than 51.5, I want to say sell. And then it will make sounds for me based on that. Save. Right? And then you know, the numbers that it actually gives you over here are snappy. I like it. Now, I think that News Squawk is updating their service. Maybe they've updated it and they need to go check back. I should check in with them again, but you know, they're still substantially, they've brought their prices down too, but News Squawk is still substantially more expensive, unfortunately. And Financial Juice, I bought a lifetime subscription from them, so that was the best $1,000 I ever spent, I think. At the time, I was like, is this like I'm making an impulsive decision and the service is going to be crap and I'm going to ultimately regret it? But no, it's been great. And then they started the affiliate, and we have the affiliate links down there for you guys. Doesn't Financial Juice repute that? I would not say so. I think that Financial Juice tends to Financial Juice will alert you to a lot of news. In particular, they will give you news about things that are happening in Europe, for instance. So there are a lot of individual things they call out on the Squawk that sometimes I don't need to hear. And I think that News Squawk is better at that. But I think that a part of the way that News Squawk is able to do that is they have, you know, there's a bond feed and an equities feed and et cetera, right? So. Okay, so we got 2 minutes here. clear up some tabs here. No, Financial Juice doesn't have feeds to choose. They do have like a Twitter-like feed that you can customize what shows up. But they don't have like separate news squawks. They basically have like their main news squawk, and then I think they have one for like unusual activity. There's one that you can get for stocks that will alert you to unusual options and volume activity in individual stocks. Okay, they are pulling. I don't know, I'm feeling a little tense going into this move, just seeing all of that volume, all of that liquidity pull. But maybe it ends up being a nothing burger. We'll see. Actually, no, I take that. This is probably one that's probably going to move no matter what. Even if they're like close to in line, there's probably going to be some volume pop here. Wow. Okay, so that's... Okay, so prices paid 44.2 versus an expected 52.3. Yeah, that justifies a little bit of a buy there. I'm gonna bring the spread in here for them. Okay. Darn. I was hoping that somebody would be stupid enough to buy into me, but it didn't happen. Okay, so to review, US ISM manufacturing PMI 46.9 versus an expected 47. So very close to in line, but the big one that you got to remember to pay attention to this if you're in the bonds, man. US ISM manufacturing prices paid 44.2 versus an expected 52.3. So they were actually expecting an expansion, and they got a major contraction in that number. That's a huge miss, and that is a very deflationary number. The S&P 500 appears to like it as well. Now, granted, we had a lot of data today, right? So the mistake I made last time was I kind of got into it a little bit too early, right? There seems to be a lot of shuffling around there in the micros. Yeah, I was worried about that. So yeah, I could kind of see that there's a little bit of a fight at 28.5, 29, right? It looks like the bids are pretty good. Like when it ticks up, that bid at 29 is there immediately. They are able to take 28.5 offer briefly, though. Okay, there was a little click there. Bid at 28. No, it wasn't that huge. It was about 1,000 contracts bid at 28. It looks like they sold them too. No, don't point that out to them. See, now it's struggling there. It's like, you could have gotten 3,575. I know, but most people aren't even looking at this screen. Well, nothing I can do about it now. I suppose this could be one of those like buy the rumor, sell the news sort of moves, but I tell you what, the numbers are a little wild, aren't they? Right? Because it's like employment's still good, but like costs are coming down. I mean, there really is like almost a Goldilocks scenario, though, isn't it? You're essentially buying the high. Yes, that's essentially what I'm doing. You. I let it pull back pretty good. Clearly though, I didn't get the right spot, right? Because 26 would have been way better. I'm gonna try playing it over here in Sim 2, okay? Closer to 235. Oh, Zen 235. You think it's gonna come all the way that far back? I guess we'll see. I hope not. One thing I should note, though, is that in ZN, they did not see that much of a volume impulse coming into it. But I did see quite a bit of volume coming into the steepener spread trade. I'm seeing buying in the 5-year, selling in the 30, like outright buying in the 5 and outright selling in the 30. So, oh man, maybe you're right. Yeah, well, 23.5 was definitely like the hole from before, but I really didn't think that this was one where it was going to pull all the way back, right? I thought that number looks really significant. The problem is just that we already bought so much today, right? So that makes it hard. And it looks like the dollar is kind of doing stuff again, right? So I don't know if it's scary to me. How far would this have to go? I don't know. I mean, I might puke the position well before that, but I don't think that I would be switching to, oh, maybe this is a sell until maybe even below 16. And we are going to have to afford it a little bit more room than we normally would like to, just because there's, you know, this has been a relatively volatile market in the Treasury. So okay. So I'm looking here. I'm like, okay, so is the volume still there? Well, there was 1352 traded at 25, but then they bid up 61. Okay, so there's a little bit of an iceberg at 26 that they got through quickly. Morning, Marty. How have you been? See, now it's playing games with me. It really does feel sometimes like it's watching me, right? And is reacting specifically to me. Goes up there, one tick short, huh? Okay. Okay. And like if that was, because in this instance with the main treasury over here in the micros, I thought I was getting a good spot with the main treasury. You know, I kind of know that it's going to range a little bit, and I'm kind of trying to use that to my advantage. So for it to like come right to where my order is and it be really stingy multiple times is like really weird to me that it happens so often. Because to me, the order at 26 half is random. It's just it just happens to be this at 26 half. Because that's when I started executing. The sacks are watching you. Right. Oh, it filled me at 20. Yeah, okay, so I'll take one off there now. Oh, no, the issue that I get with a trade like this is like it comes back to 23 half and it's just like, oh, well, I don't want to change the trade. I still want to go long. I just wish that I went long here instead of here, you know? Oh man, an unknown device was detonated in Belgrade. You know, Russia was kind of saying stuff about that there was a possible revolution happening over there, so that's kind of a little bit. Okay, let's read what Zero Hedge says about the ISM. With overall macro data serially surprising to the downside in May, it is no surprise that expectations were for sub-50 contractionary prints for ISM and PMI manufacturing surveys this morning. Manufacturing PMI slipped from its flash 48.5 level to 48.4 down in May, down from 50.2 in April. ISM manufacturing also disappointed, falling from 47.1 to 46.9. The good news: prices paid plunged back into contraction. The bad news: new orders plunged to their biggest contraction since COVID lockdowns. Wow. Really? Chris Williamson, chief business economist at S&P Global Market Intelligence, said May saw a renewed deterioration of business conditions in the U.S. manufacturing economy, which will add to concerns about broader economic health and recession risks. Although a record improvement in supplier delivery performance helped the manufacturers fulfill back orders in May, generating a third successive monthly rise in output, the overall rate of production growth remained disappointingly meager thanks to a further drop in new order inflows. Unless demand picks up, production growth will move into decline, seen as it is clearly unsustainable to rely solely on the backlog of orders, which are now being depleted at the fastest rate for 3 years. Hence, companies are cutting back sharply on their input buying and seeking to minimize inventory, tightening their belts for tough times ahead. All of this is, of course, disinflationary, with manufacturers and their supply chains having seen pricing power shift rapidly from the seller to the buyer over the course of the past year, resulting in a dramatic cooling of industrial price pressures. We are likely to see further downward pressure on both output and prices for goods in the coming months, thanks to the demand environment, which has been hit by higher interest rates, the increased cost of living, economic uncertainty, and a post-pandemic shift in spend from goods to services. Finally, Williamson notes that one area of resilience is the labor market, as firms continue to take on more staff to fill long empty vacancies. Well, that shot back up there awfully quick, didn't it? Last sentence here. Though we should bear in mind that employment is typically a lagging indicator, it does nevertheless point to upward pressure on wages. Some weird deep MBO bids in ZB. You're talking about these 700s down here. I don't know if that's a big enough aberration to be too concerned about, but I do agree that it is a little odd. Uzi gives a shrug. Yeah, I don't know, that bounced back up there a little bit quickly, didn't it? I think that it's probably because the dollar is starting to become well, it's been all morning, right? The bet that we're, for the dollar, probably the dollar declines a bit more again. But we'll see. Yeah, clusters. Well, it's a little weird for it to be like that whole area there, but that is like outside of that distribution, so I don't know. I don't know if it's actually odd. Or I should say, it does seem like something that I don't see usually, but I'm not sure that is really something that would matter to us. Carl Quintilla tweets hashtag deflation, retweeting. Oh, but that's retweeting Mark Cuban, who has a drug company that's going to be charging less for drugs. I wonder if they have the drug, my drug. Let's see. Well, they have the generic, but not. Papyrus IQ, the persistent weak readings in the PMI support analysis's expectations that the economy will slip into recession this year, but there have been several periods, including in the mid-1990s as well as mid and late 1980s, where prolonged readings of the PMI below 50 were not were not accompanied by a recession. Manufacturing, which accounts for 11.3% of the economy, has been depressed by rate hikes worth 500 basis points from the Federal Reserve since March 2022, when the U.S. Central Bank embarked on its fastest monetary policy tightening campaign since the 1980s to tame inflation. Another little quick impulse up. But we need them to tick 26. Come on. Well, I'm just kind of nibbling at it for now. That's a better bid that time. There we go. There we go. Did your dollar tank? Yeah, it did. On the release, it tanked, but the dollar recovered. My eyes are going a little fuzzy. I guess I'm still a little sleepy. Oh, we get the oil at the bottom of the hour, don't we? Or no, it's natural gas. Yes, natural gas change. Where is it? He's here. Oh. Oh, what do you mean, where is? I think that he gets the MBO data through Sierra charts. What he's saying is there's like all of these orders down here where there's like 700s, and he's saying that there's a number of unusually large individual orders in there. And I'm just saying, well, that would be the range outside of the current range. So I don't know if it means anything. I suppose I could make the argument that it's supportive, right? Like, this area is an area where there's been a liquidity hole, and if they were to to get outside of it, it would require a little bit more volume. And so you can see that liquidity below us stacking up a little bit in case it happens. But and while I would say it's not something that I usually see, I'm not so sure that it's something that I can say would be significant or that we should really worry about too much. But I guess we'll see. You know, I'm not getting the continued bid here in the Treasuries that I thought we might after that news, right? So maybe they were front running it the whole time, and we just kind of end up in this range here now the rest of the day. Has ZN always been a news numbers release instrument? I would say that ZN, that ZN has always been an instrument that's really good to trade the news with. Yeah. Oh yeah, we've had plenty of economic releases today. So the big one that we recently had was U.S. ISM manufacturing prices paid 44.2. Earlier, labor costs revised was 4.2 versus an expected 6. Okay, but then also earlier we had U.S. initial jobless claims U.S. ADP employment change 278 versus 170. So what we're seeing is like employment continues to look good, but remember that's a lagging indicator, and everything else kind of is signaling the economy moving into a contraction and disinflation. Yeah, it did move hard on ADP, didn't it? The move on the ADP is I think is what you would expect, because that ADP, that was 100K off the estimate, so that's a pretty big beat, right? the labor cost revised, that's never been a number that I can recall like taking a trade off of or anything like that, or the market really paying attention to. But I do think that that's what moved it. So that was like an unusual move. The ISM manufacturing PMI, I think that the initial move just off of the news was okay, but I do kind of feel that that number is a little bit more significant than what the market action would suggest. So it's okay. We trade it into a recession. Yeah. You never know. The issues with the recession is that like even if you know it's coming, the way that it plays out, it often surprises you. And why don't people buy the dip? Why don't people buy in a recession? Well, it's usually because they don't have the money, right? So we got to be careful what we say about this, but I do feel like that we should be pretty well positioned for a recession if it happens. Much better position than in past situations. Yeah, we day trade it into. Oh, you're saying that we're gonna make it go into a recession from our day trading? Well, guess you can try. The thing is we're gonna get that jobs number tomorrow, and at this point, who knows what we do after that? Like, there's usually a lot of analyst reports that I think give a really good rundown of like what to expect from it, and that I kind of use as my baseline. But at the moment, even if I knew what the number was, I'm not quite sure I'd know what it means, what way the market would move off of it. So let me pull it up here real quick. They're looking for a reading of 193 versus a previous reading of 253. Well, so I think for the market to freak out, if it was higher than last month's, like if they were above 253, then the market would probably throw a fit. But I don't know. I don't know if the jobs numbers really mean anything at this point. I think all of that data is kind of questionable suspect. There's now a weird heart icon in your YouTube mobile chat. I mean, like you can add a reaction and put a heart, or are you talking about something else? You sure it's not just like a super sticker or something? I'm going to try and pulling it up on my phone, okay? Oh, well, that's disappointing. It doesn't show me. I would think that it would show me the live stream on my other account, but it's not. Maybe I'm being throttled. There it is right there. Ah. Do you listen to dubs? I listen to all forms of electronic dance music. Yeah, I don't see that. I see the scissors up at the top. I see the chat filter. See with the place where you can donate, and then just the smiley face. I don't see the heart. I guess you'd have to like take a screenshot of it and post it in Discord or something. You know what though? Dubstep is just not very popular anymore. It's really quite crazy to me to think back about how popular dubstep got, because when Skrillex kind of started making more trap stuff, it all just switched, and like real pure dubstep is just not very common anymore. Goldman Sachs President Waldron says regional banks will have lower capacity to lend here. Yeah, I mean, everything that we're getting, I think, kind of suggests that the recession is proceeding according to schedule. Everything is proceeding as we have foreseen it. I don't know if we could really say that we've foreseen it. It's definitely been like one of the key scenarios on the top of our mind, and the one that we thought was the most likely, but still one that we were very uncertain if it was really going to play out, because there was so much stuff that just seemed contradictory. That shared on main chat. Let me see. Oh. I don't get that. How do you get that to show up? I kind of want to see that out now. That's cool, I guess. It looks like NQ doesn't care about numbers. It does care about FOMC and CPI when it's expected to be out of expectation, but ZN trades all the numbers. ZN is extremely economically sensitive. But yeah, lately I would bet that the NASDAQ would be more sensitive to chip company earnings than anything else, right? Notes trade the cleanest off of the numbers. Okay, that's maybe one way of putting it. They're very economically sensitive. So they're really good to trade economic numbers with, yeah. Sometimes there's situations where it would be better to trade ES, but you know, we went through that period where like I wanted to trade ES, and I went through it, and we had some success and we had some failure with it, and then the market kind of changed. And you know, since I've started trading the micro treasury yield futures, I feel like ES has kind of changed, and every time I look over there in ES, I'm kind of like, gee, I'm really happy that I don't trade that anymore. The thing that I think is unique and interesting about the treasuries is that they're so liquid that it really takes a good reason for them to move significantly. They don't just, you know, oh, I feel like we should do something, so they move down like a whole percent. It does, just like ES will do those things. Oil will definitely do those things, but treasuries, unless there's a good reason, they tend to just sit in a range, and it can be really hard to push them out of that range. What we're seeing right now really looks like stuck in a range. I'm seeing buying in ZN, by the way, net buying in ZN. So like the flows are supportive, but they can't get through the liquidity. It's just kind of clamped down, and they've said like, nope, that's all you get. Like, notes the best for risk aversion, less what, yeah. Well, especially when you get like unexpected breaking market news, the treasuries are really good to trade those sorts of things, because usually when you get that kind of news, it's bad news. So the treasuries bid on it for one thing, and it's easier to make money from buying something than selling. It's just always the way that works for whatever reason. There's some structural reasons why, but and you can do it, and there's still liquidity, and it's, you know, it moves slowly enough that you can like still do things. When the S&P 500 gets into those situations, it almost feels like you can't even, like, you know, where do you even click? It's just like going around everywhere so quickly, you know? So in a risk off environment, man, having that experience in the treasury market under your belt is so valuable. An interesting large order there at 23.5. The thing I find odd about that one is that there's not a whole lot of liquidity at 23 and 22.5. That was kind of like a central area of sorts. So it maybe makes sense why, if I was going to put a big lot out there, why I might put it there. But I don't know what's with the liquidity below it. That's a little weird. They did stack a little bit. I don't know about that. That played out a little weird. It looks like some of the orders that were there at 23.5, they didn't get filled and they followed it up to 24. I do remember a period of time where the notes, well, yeah, because what happened was during the quantitative easing era, there was like this unprecedented amount of volatility in treasuries where they bought, and a lot of people did really well with the notes during that era as well. And then 2017 came along and volatility just fell off a cliff, and it was like impossible to make money on anything, especially ZN, because it's like you have to do range bound trading and like you can't even freaking get filled on anything. That was so frustrating. Every time that it seems like maybe we're going back into that regime, something comes and surprises us, right? Like, I thought that's kind of what the summer was going to be like, but that certainly hasn't been how the first week has been, has it? Maybe after June's economic data is out, things chill out again. But I don't know. If the data continues to come out the way that it is, it's probably not going to be like that, right? Because what we're seeing right now is there's going to be a recession, and as such, probably volatility is coming back into the stock market, right? Gold took the ADP move cleaner than ZN. I don't know. GC has kind of been choppy off after this as well. What I continue to see over here is that there appears to be some sort of a spread trade going on. What platform do you trade futures on? I am trading with Jigsaw Day Trader through sorry, what's their names? Edge Clear. Isn't the trade you have? Well, I was trying to manage it. I was doing a sim trade where I kind of average out, and then I have one that's just an outright one, right? Kind of looks like it's time for me to bail on the outright one, though, isn't it? I'm certainly considering it. The heck was that? The ADP move on ZN was sell, and then they bought it back quickly. No, I didn't see that. I mean, maybe it went like one tick above it, but overall I would say it was a sell. Anything that you might see with that, I would just chalk down to low liquidity. I'm hearing something like cracking, like that something's gonna break. I don't know where the sound's coming from. Maybe I'm hearing things. Maybe it's something in the song. And it's not actually coming from my room or my microphone. Well, on the break of that range, there was a little bit of selling in ZN on it too. Hey, Mission, how have you been? Well, there might be an iceberg at 21.5. Yeah, I don't know. The way that this is trading, really suggests to me that this thing is just going to try and rotate around 24.5 the rest of the day. Like, you might be letting the sellers have their moment now, but I bet you that it eventually snaps back up here and in the end doesn't do a whole lot. My trades ran out in the European session and now I'm in watch mode. Well, it's certainly been an interesting market today, hasn't it? Hasn't quite gone the way that I wanted it to, but I think for like in the long run, for like good activity for us to trade on and everything, you're kind of getting the best case scenario right now, right? Ouch. Another tick down. Where did I get in? 357 and 36 right now. Huh. And it is kind of acting like they might sell some more. Am I being too stubborn and letting this ride too much? Yeah, the ADP we moved down and then kind of recovered a little bit of that. And then when we got the unemployment claims / labor costs, and I think it was the labor costs that really caused that move, then we jumped up. And then they extended off of that 2 times, which was a little surprising. And then we got the PMI number. And there was a big jump on the PMI number, and since then we've been kind of sideways to down. Transactions on both sides here at 21 and 21.5. A little bit more liquidity below us in ZN now, and we're kind of into that area where there's those big MBO bids that Octavius is talking about. Oh, here we go. Just something. Mohammed A. Al Rain. Another weak ISM manufacturing data point extends the series of contractionary readings. This is consistent with the notion of a 2-speed U.S. growth economy. Services solid, manufacturing less so. Comes with an inflationary differential with the more inflationary. I hate it that WeTech doesn't show me the whole thing on these longer posts. With the more inflationary component, services being less sensitive to the effect of Fed rate hikes. Am I +5 here? No, I'm not. I'm +4. On number of contracts for this sim trade. The dollar maybe looking, it's kind of towards the bottom here. Maybe the dollar is going to do something again. Not seeing the Japanese yen doesn't look too interesting at the moment though, so I don't know if that's really means anything. Okay, we did get one order there. Wow, Cat Turd has 1 million followers on Truth Social. That's crazy. Why are they selling ZN based on bad ISM? I don't know if that they are. I mean, their initial move was a buy, right? Since then, it's kind of gone sideways, and I'm not actually seeing necessarily outright selling in the order flow. What I'm seeing is more of like a spread trade and maybe rebalancing and so forth. So these flows that we've seen since the ISM that have been that have kind of moved us to the downside a little bit may have nothing to do with ISM, right? For instance, they could be guys that were long this whole time on the premise that the numbers were going to push ZN up and they're just taking profits, for instance, right? So they've been sitting at 21.5 now for quite a bit. First they did it at 24 and now they're doing it at 21.5. Well, don't we have Fed speakers later today? Oh, yes, we do have Harker at 1 o'clock Eastern time. I don't know. Maybe these orders down here are stubborn and they really want the fill. I find it curious that you got all this liquidity down below us, and meanwhile, there's not really a whole lot of activity at current prices. Well, on that last uptick, maybe a little bit of steepening from the 5-year, which would help us. The flow is definitely looks like a steepener. But so far, that's kind of been hurting us on the downside, right? Because the 30-year ends up going down more, you know. The yield ends up moving up more in the 30-year. Iceberg at 22. $18.40 to bid. Or let's say $18.40 takes it bid at 22. Only stays there briefly, goes over again. $8.43. Goes after again. Flips there. ZN actually, ZB ticked it down. Oh, now they're doing it at 21.5. ZF ticks up. This really does look like a spread trade. So who knows how long it sits here and does this, right? Oh, why? That's a loaded question. Why would you consider ZN a toxic asset after all the debt the US is? I wouldn't call it a toxic asset. I mean, it's an asset. It moves. You can still use it for what you need to use it for. At some point, the debt becomes a significant issue for the Treasuries, but we're not there yet. Oh, it was a good 2 ticks there. Nobody's traded into 22.5 yet. Oh, there we go. They need to recruit you and Firepower. And I don't think that I would be a good Federal Reserve president. Oh man, the AC is turning on and it's coming over here. It feels good. It's doing this again, like it'll uptick. It takes a little bit to get them to nibble at the next offer. So one contract went through at 23. I'd say this bidding and the flow that I'm seeing in the 5-year is supportive, but this, what I'm seeing right here in the flows, they're not. They're a little reluctant to hit the offers. That is not supportive. Vehicle sales looks like this, like ES likes this versus GS doom and gloom. The stock market may continue to ignore the leading indicators, especially since, so I think one of the big things that you got to keep in mind here is that the bad numbers that we're getting are really coming from manufacturing. Okay. And services is not the same. So our economy is surviving just on services right now. Now, for treasuries, that's a big deal, because for treasuries, you know, those numbers, you start getting disinflation into those numbers, then that really gets the Federal Reserve's job done. And they could maybe even go back to reducing rates then, and they would love that, right? But for equities, it might be a different story. And equities and treasuries have kind of been disconnected from each other lately. Okay, so we came back down there a little quickly. That again, it was like slow creep up. I don't know if there was really the volume behind it, and then all of a sudden 3 ticks down, and they ran into a huge iceberg at 21.5. 5K traded quite quickly, and they did not clear that price before it ticked back up. So when I see something like that, that can be something that can move them a little bit. So let's see, they're not coming away from that quite yet, but it's often when you see that sort of a thing, it's indicative of there is a large meta order buy and that ends up chasing it up. And there is a lot of volume going off at 22 as well. Fortunately, this has not really moved the needle for ZB, which is still at its lows. Right, like these are up. ZB is still having a hard time bidding 27. That definitely, I think there's really strong evidence to suggest that there's a spread trade going on in the treasuries here, and that the position they're taking is a steepener. Well, looked away for a second. I think I missed something, but that tick down at 22 looked a little heavy. Man, I think I'm getting like hyper focused and getting into that I'm gonna fall asleep sort of thing again. I don't know why I've been doing that lately, but I will go in cycles like that. Maybe I need to drink some Gatorade. Okay, moved away from it again. The 5 years still seems to be pushing. It's just that 30 years not coming along at all. And it ticks down, in fact, in ZB. Well, I'll keep watching it for a little bit more, but it looks like we take a $30 loss today, guys. So I will see you tomorrow. Let's change the title here real quick. Treasuries bid on disappointing economic data is what we're gonna say. Yeah, it's okay. $30, no big deal, right? It's just little disappointing. Anyways, guys, I will catch you tomorrow. Non-farms, always a big deal. So see you then. Stay excellent, team.